Good morning, traders. It is Friday, May 30th. Taking a look at the charts, equities are trading slightly lower today, down about 0.1%. Markets are trying to figure out what to do. When we look at the 30-minute chart of the S&P 500 or the NASDAQ, we had that big washout low. We had panic selling, then a washout low, and now we have this short-term standout low on the chart, which if we look on the daily chart, when I say a short-term standout low, it's usually one of these. This is a short-term, it's a standout low. It's not like a little pullback along the way. It is a pullback that stands out as a critical turning point. This is another turning point in the market. Equities are trying to figure out what to do. If we look at the 30-minute chart here, we've got a rally, we've got a pause. It's the big question is this a little bull flag? And we start to see another push higher, which the daily chart, similar here, would be another significant push higher and should bring us up to pretty much new all-time highs if that is the case. Now, there's a lot of overhead resistance, so there will be some selling in there, but the NASDAQ and the S&P 500 are in striking distance of that. Now, yesterday we did see the Mag 7s. Let's take a look. The indices did the same thing, but the Mag 7 definitely had some high volume selling. I'm not a big fan of the markets when it has a big gap up. And then, of course, it sells down with heavy volume. Actually, if we just go to the indices like the SPY, we can see, actually, I'll go to the futures here, SPY futures. And we look at the 10-minute chart down at the bottom. We had pretty high volume yesterday in the grand scheme of things. It was just a never-ending stream of kind of all morning and all day selling. So the market gapped up on news, and institutions were just kind of unloading and selling into that bullish news. And that is distribution selling, in my opinion. That is big institutions saying, hey, this is a premium dollar we're getting. Let's just cash out a bunch of our stocks and sell out into the good news, into the general public trying to buy it. And we saw that even with the NASDAQ across the board, just huge volume to the downside, and institutions are unloading. So it doesn't mean the market top is in, but it's definitely a bearish sign, and it shows that we've got distribution selling, institutions getting rid of shares into this this higher pricing in the markets. If we take a look at what else is moving here, we've got bonds are relatively flat on the session. They have had a bounce the last few days. Nothing new there. The dollar is having a little bit of a bounce, but it did take a bit of a haircut yesterday. The dollar did very similar to what we saw in the mags. The dollar had a move up higher yesterday, and it sold off throughout the rest of the day. So overall, it's still showing that it is still struggling. Anytime it moves up, it's getting hit and met with some sellers. We'll see if it can carve out a bottom and break through this 50-day moving average. Now, we've gone from the 20-day, the pink moving average, which has been more or less kind of stair-stepping its way down. It is now a little bit more so flatlining, and the market is trying to see the dollar if it can hold through here and build a launch pad and eventually get through this blue line, which is the 50-day moving average, which would be a significant kind of turning point for the dollar if it was to start moving up. Obviously, it hasn't done that yet, but we need to see and keep our eyes on that momentum. Obviously, the dollar was the most hated asset class. If anybody spoke bullish on it, you pretty much got shot and burned at the stake, is what I've learned. And typically when the sentiment is that strong, and we can also usually see that with the volume, usually it means we're getting close to a turning point. So I'm thinking the market is trying to carve out a bottom, and eventually I think it will go higher and the stock market will fall, and as things get chaotic, the dollar will strengthen up. That's what I think is going to happen. We don't trade based on what I think. We trade on what the charts do. So I'm just sharing what I think is going to unfold, but we always follow the price charts. I could be bearish, yet we're long the markets, and that is exactly the position that we have been in and are in right now. So let's take a look at gold. Gold down 0.9% this morning. Again, it is continuing to kind of flag sideways. It is still holding up within a bullish pattern. It does have a little bit of a bull flag pattern here that if the stock market was to start to roll over, I think we could see gold, silver shoot up for a defensive leg higher. Gold could run all the way to about 37.50, which is where Fibonacci upside target points to. So that is still a very possible play going forward. If we take a look over at Bitcoin, it continues to kind of pull back and flag sideways. It didn't really get much traction yesterday with the stock market. It did run up a little bit with the stock market, but then ended up selling down. We can see here, if we just zoom out on this 30-minute chart, you can see Bitcoin has dipped into this short-term oversold territory. Now, it's had a series of rallies, pauses, and it is in another pause phase, and it is drifting sideways. It's dipping into this lime green, which is an oversold market condition, meaning bargain hunters could step in here at any point because it is in an uptrend, and this is a type of like a buy the dip type of signal, very short-term strategy, but it is pointing to pretty much imminent pricing to the upside. The big play here is when we go back to the QQQ or the SPY, the stock market is trying to figure out if it is going to break out of this bull flag pattern. So we could argue we got a rally and a pause here. We could say this is a longer bull flag and this has got some strong momentum to really take off. The big question is, are we getting rejected and the market's going to sell off? That will pull Bitcoin down. If the market does break and start to push higher and extend, then Bitcoin will most likely rally and break free and be off to the next upside target. So again, this is why I focus always on the stock indices, the U.S. markets, more so specifically the S&P 500. If we know what that is doing, it tells us what to do and what to expect in pretty much all other asset classes, whether it's a positive or negative relationship with the various assets. So understanding the tide of the major indices bleeds over to how we attack and what to expect in pretty much everything else. That is what I've learned. That's what I've followed and do. And it works very well for the way I view the markets and the time frames that I trade. I thought we'd take a quick look at a couple of different ways to view the markets here that we haven't really looked at in a little while. This is IWC. This is the microcap space. So there's the Russell 2000, which is IWM. Well, this is the next phase down. This is the majority of stocks. Now, the stock market put in a major top here in 2021. It has kind of broken down. It's kind of gone into this complacency move. It does have this very strong drop to the downside and this big kind of bear market or dead cat bounce in the space. Now, this is the micro caps. They're all running up into resistance. This is not a very good sign in the grand scheme of things. Generally, we want to see small caps and micro caps leading the way, coming to life, and they're really kind of struggling. And to me, this complacency move, this sideways move, and this crack to the downside, very significant, is very close to what we get into the anxiety phase of stage 4. It is this phase right here where the market is bouncing up as this dead cat bounce or bear market rally and then eventually starts to go off a cliff and picks up speed. So the micro caps are kind of leading the way, looking really, really kind of bearish. They have had a nice little bounce and rally recently, but in the grand scheme of things, the overall major tide is going down. Another way to view the market is this here. This is the RSP, which is the equal weighted S&P 500. So stripping out the heavyweights of the tech, it's the small caps and the micro caps. So this is like to me, it's kind of like the broad market. It's the top 500 stocks, equal weighted, the small caps, which is 2,000 stocks, and the micro caps. Obviously, we can see here we've got what looks to be a double top. We've got a major kind of topping volatility range. And the big question is that, how is this? Is this eventually, if this does break down through here, we're going into a full-on stage 4 meltdown, which is a huge opportunity for those who embrace it, who understand it, and actually manage their positions to either avoid the crash and continue to just generate interest safely on the sidelines, or to benefit from the chaos and the falling price. So this is, what the overall market is doing. It hasn't really gone anywhere in several years, the majority of portfolios, and this is a good view of that specifically. Anyways, that's it for now. We'll talk to you soon. Take care. Bye-bye.